In this video, we are going to talk about 10 dividend stocks for passive income. So before starting this video, please like this video and subscribe to this channel for our future updates. A savings account or a long-term bond was the best way to get low-risk and steady returns back then. And letting your money grow through compound interest was the best way to invest. However, today's short-term interest rates are close to zero, which means that risk-free assets aren't really risk-free anymore. People who buy long-term government bonds could lose a lot of money in the long run if inflation rises. Income investors need a strategy to keep their money in order. We think dividend stocks with a long history of raising their dividends every year are the best choice for people who want to make money without having to work. Number 10. Cullen/Frost Bankers Incorporated, NYSE, CFR. The first company on the list is a financial holding company that is based in San Antonio. Cullen/Frost Bankers is one of the best dividend stocks for passive income, even though it has a small market cap. CFR was one of the 50 largest banks in the United States as of this year's third quarter report. It had $40.1 billion in assets at that time. CFR is a bank, investment, and insurance company that serves businesses and individuals across Texas. It has been in business since 1868. If you want to buy a share of CFR, it costs $83.16 and has a trailing PE of 15.6. Now, CFR's board has agreed to raise its quarterly dividend to 72 cents, up from 71 cents. There is a coronavirus pandemic right now, and we think CFR's board is being a little careful. In 2019, the board raised the quarterly dividend from 67 cents to 71 cents, which is a lot. We think that the growth rate in quarterly dividends will pick up again in 2021, but not for a long time. There were worse financial results in 2020 than in 2019. Number 9. Cincinnati Financial, NASDAQ, CINF. If you want to know what the ninth stock on our list looks like, you can look at Cincinnati Financial, CINF. But it's in the insurance branch, not the banking one, so it doesn't work. 19 hedge funds bought this stock in the third quarter. Cincinnati Financial will have a $60.57 book value per share on September 30, 2020, and it will be worth $77.40 when that time comes. Based on this figure, the trailing PE ratio for CINF is 16. If you own the stock, you get a $0.60 dividend every 3 months, which is up from $0.66 earlier this year. The dividend is 3.1%. Income statement figures for the 3 months ending in September look good, but the 9-month figure is still in the red. Number 8. Black Hills Incorporated, NYSE, BKH. The Black Hills Corporation works in electric gas utilities, power generation, and mining. Among these businesses, the first two made up more than 90% of the total revenue. The company was founded in 1883 and has raised its dividends for 50 years in a row. We think that's really cool. The company's current quarterly dividend payment is $0.565, which works out to an annual dividend yield of 3.65%. A few months ago, the company raised its quarterly dividend by 5.61%. Number 7. Leggett and Platt Incorporated, NYSE, Leg. This company, too, has long roots. Leggett and Platt Incorporated was started in 1883 to make bed springs with the goal of making the best sleep possible. After a little research, we found out that the company's modern growth era began in the 1960s. As a result of a new strategy, the company has taken the lead in manufacturing, marketing, and distribution in the consumer discretionary market. In the third quarter of this year, Leggett and Platt had assets worth $4,663.8 million. When it comes to debt, short-term debt makes up 20% of total assets, while long-term debt makes up 52% of them. Number 6. Essex Property Trust, NYSE, ESS. Essex is in the real estate business. Every year for the last 26 years, the company has been giving out more dividends. When there isn't a lot of housing in a certain area, Essex buys, builds, rebuilds, and manages multifamily apartment communities in those areas. If you look at the share price and PE ratio on November 20, 2020, they were both $254.10. There were new financial reports, and we learned that the company bought back 121,260 shares of common stock for $26.6 million at an average price of about $219.24 per share, which is in line with its stock buyback plan. It pays out $2.08 a year in dividends to the company, which is 3.27%. Compared to the last time, quarterly dividend payments rose 6.54%. At the end of September, there were 28 hedge funds that were positive about ESS. Number 5. Cisco Incorporated, NYSE, SYY. Cisco is the world's leader in selling, marketing, and distributing food products to restaurants, healthcare, educational facilities, lodging establishments, and other businesses that serve food away from home. Cisco also sells food to people who make their own food at home. The company's sales and revenue took a big hit because of COVID-19, just like it should have. Getting back into recovery stocks like Cisco now that we have 3 vaccine candidates that show at least 70% efficacy is the right thing to do. They paid out 2.57% in dividends last year, and they paid out 0.39 cents more than they did the year before. People think that the company might not raise its dividend at the same rate next year, but they think it will be better in 2022. At the end of September, there were 33 hedge fund managers who had money in this stock. Number 4. General Dynamics, NYSE, GD. An aerospace and defense company is in 4th place. Even though COVID-19 had negative effects on this industry, the company was able to keep the damage to a minimum. People who work for the company say that, "We are going to keep paying down debt and investing in the company for the future." Oakmark Funds thinks that GD is going to be a good thing. It costs $148.36 to buy 1 share of GD. It has a trailing PE of 13.5. In our list, this figure is also the lowest one. The stock's current quarterly dividend is $1.10, which works out to an annual dividend yield of about 3%. Compared to the last time, dividend payouts went up 7.8%. In September, there were 37 hedge funds that bought the stock. Number 3. Chevron Incorporated, NYSE, CVX. Chevron is one of the world's top energy companies. Oil and gas exploration, production, and transportation are the company's main jobs. It also makes and sells transportation fuels and lubricants, makes and sells petrochemicals, and develops and deploys technologies that make the company more profitable. There is no doubt that lockdowns and a drop in demand due to COVID-19 had a big impact on the company's sales. However, 43 big hedge funds still took positions in this company. Before the news about vaccines came out, the best time to buy oil stocks was 3 weeks ago. Even so, we aren't too late. Shares of Chevron have risen about 40%, but there is still room for a 20% rise over the next year. While you wait, you will get $1.29 in dividend payments each quarter, which works out to a 6% annual dividend yield. Chevron has been able to raise its dividends for 33 years in a row. Number 2. Exxon Mobil, NYSE, XOM. Exxon Mobil is also in the oil, gas, and consumable fuels business like Chevron. 135 years ago, Exxon was a small company that sold only kerosene to people in the United States. Today, it's one of the world's largest publicly traded energy companies. As of the end of September, 52 hedge funds had a positive view of XOM. It's true that XOM shares fell a lot this year, which led to a double-digit dividend yield earlier this year. Exxon Mobil has been able to raise its dividend for 37 years in a row. During the third quarter, each share of the company's stock is worth 87 cents, which means that the dividend for the whole year will be 9.42%. Number 1. Pepsi, Nasdaq, PEP. In 1965, Pepsi-Cola and Frito-Lay joined together to make and sell their products under one company. Over 200 countries and territories around the world enjoy their goods. You might not have known that PepsiCo sold Kentucky Fried Chicken, Taco Bell, and Pizza Hut in 1997. People who work for PepsiCo made almost $48 billion in sales, $5.28 billion in net income, and $3.79 per share in the first 9 months of 2020. As a result of changes in the retail landscape, our industry is still being affected. This includes sales through e-commerce websites and mobile apps, as well as through subscription services, the integration of physical and digital operations among retailers, and the international expansion of hard discounters. The company, its current dividend is $1.02. If you look at the dividend in annualized terms, that means that the dividend yield is 2.85%. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.